All right. It's 6 p.m. over here, and I think it's noon on your end. So let's get started. So, first webinar, crypto trading webinar, how to make life changing money. Oh, a typo right there. That's a good start. From crypto in 2021 and cash out right at the perfect time. Right? Even if you're starting from nothing and don't know anything about blockchain, which coins to buy, without relying on luck, obviously, or tips, stupid tips by some idiots, or waste hours. So this is what this webinar series is going to be all about. And I'm going to break down all the new fundamentals you're going to need to understand to design a trading system for crypto. We're going to do a deep dive on momentum systems for crypto, because this is what this is. I'm going to show you how I iterated and optimized my own personal trading system. Right? In the last webinar, I'm going to show you the rules for my actual trading system, which both Scott and I settled on, which is actually pretty conservative, but it's performed pretty well, amazingly well, actually. So already in 2021, I made some actual life-changing money from crypto. And what I want you all, to do, what I want to show you, is to make life-changing money as well, right, from crypto in 2020 and beyond. And more than that, I'd like to show you how to cash out right at the perfect time. So, without tips from idiots, rabbit holes of research, all the stuff that I had to go through, right? Spending every day, for months on end on Reddit, other forums of crypto blogs. Okay, so webinar one, and we're going to be discussing the difference between crypto and stocks, or bonds or options, what have you, whatever you've ever traded before, meaning traditional markets, right? And because they're different, right? They're different than the crypto market, and we're gonna talk about that. So, simple question first: why the hell should you even trade crypto assets? Why not just stocks, ETFs, or just buy property? And simple question deserves a simple answer. See where that actually, by the way, see where that arrow starts. Right? That's when I actually, about here actually, it's where I started a little bit above the arrow. That's when I started to launch Evil Speculator in, I think, August 2008. So a little bit over 12 years ago. Well, since then, look how far we've come. Insane. This is the best performance in the stock market in all of the recorded history. By the way, Robert Proctor, if you're listening, fuck you. And let's compare, right? Here's a list of the coins our system has owned this year. 2,391% for the highest. Don't ask me which one it was. I think it was either DOT, Doge, or NEO. And the second one ranked was a little bit over 1,100%. Try to repeat that in the stock market. It doesn't happen very often. Right? And, but by the way, yeah, the average coin, when one throws in, the average altcoin has averaged more than 500% this year. So that is significant. That's a pretty good reason to trade crypto, right? Virtually everything we've owned, beat 12 years of the strongest stock market in human history, in just a few months. So it did twice as much on average in the past 4 months. Isn't that going to be sustainable ad infinitum? Of course not, right? It won't, but it's where it's heading right now. And the rule number one for any trader, is to go where the money is, right? Go where the money is. Don't trade something where there's no movement, right? If bonds are going flat or Forex is going flat, you're not gonna go and trade it. You're gonna go where the money is, and the money right now is in crypto, and it keeps flowing there. So these markets are just turbocharged, and we really need to understand why they do this and why they keep doing this. And yeah, I know what you're going to say, right? The bear market's truly awful. Yeah. And yeah, they suck. The bear markets in crypto are absolutely horrible. And is there one? Sorry. So, but there's an upside, right? And that's kind of the whole premise of this entire webinar in a way. what if, just what if, there was a way to easily identify the bull and the bear markets and only trade the profitable times? So it's kind of our nefarious plan. And also do that with a high degree of reliability. Can you do that? What if you could only trade those, those bull markets, right? Those bull market phases, and you just stand aside when the bull market ends and then get back in, right? And well, that's what I've been able to do, at least thus far. And we've been testing with room money, and I was able to get, in and out almost right at the perfect time. And there's also a reason why I didn't pull the plug about 2 weeks ago, because this system told me it wasn't time yet. So how does that work, right? It turns out that because all the data is recorded in the blockchain, we can identify market tops and bottoms with almost laser accuracy. And that sounds like a tall story, but kind of follow me through this webinar, and I think you're gonna understand. There are actually many ways to do this, but so how does that work? It took us actually several months to figure this out. For me personally, it was clear from the get-go that the key to what we were trying to accomplish, what we were trying to do, trade crypto successfully, profitably, and ride out the troughs, right, was hidden somewhere deep inside the blockchain, because that's really what drives crypto. And so let me put this in simple terms. Every time you transfer some coins from one address to another, that transaction gets embedded inside the blockchain, right? I think most of you guys understand that. And all of those Bitcoins, or fractional Bitcoins, right, flowing between millions of addresses every day, all that stuff is being recorded in the blockchain. And the underlying premise of the blockchain is that once finalized, the blocks are basically immutable. They don't change, meaning they cannot be changed. Otherwise, the blocks that follow the preceding block, right? If you have all these blocks here, like block, 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 right? It's like a chain. Well, if you change this block, then the ones that follow are incomplete and or erroneous actually. And so that's why it's called the blockchain, right? It's literally a chain of custody that's in place, and it's visible to everyone, including you, me, the feds, and everyone else. Right? So given that, we can employ advanced heuristics to determine, and this is kind of important actually, how much money you or anyone else out there made between the time you acquired that coin and the time you actually spend it, right? If you buying anything, buying your drugs, whatever you're buying with crypto these days. And that difference, that delta, right, that's called your realized returns. So this opens the door to a lot of super cool metadata on what's going on inside the blockchain. And at minimum, I can work out how much profit most Bitcoins holders have made, right, on average since they acquired their coin. I can also find out on whether or not the average account is currently in profit or loss. Right now, that'd probably be the former, not the latter, right, based on where we are. But that's only kind of the tip of the iceberg. I can also work out the average period of time, of how long people have been holding their coins, and how many coins have been moved in so many months, how many are moving at least, let's say, once per week, or once per month on average, et cetera, et cetera. So we can measure all this nerdy stuff, right? And when there's a sharp drop in a market, we then know how many people have been shaken out of their positions, or what the ratio is between, let's say, weak hands and the hodlers, right? And because it's all encoded in the blockchain, we can do an amazing amount of data mining, right, on all of this stuff, and we can confirm our findings in like 5-6 different ways, which we think gives us a huge leg up. So the premise being we can identify both long and short-term tops and bottoms, and we can do it every single time. And through the 10-year history of Bitcoin, these signals that we've identified have not failed once ever. And me saying that, me, the mole, he was speculator. This may strike you as being strange. And because I've been always the guy who says that picking tops and bottoms when trading equities is a fool's errand, right? I mean, it's kind of been my routine, right, on the blog, and it just doesn't work. And it doesn't work because it doesn't work. I haven't been bullshitting, because if I could do that in equities, that I would be, calling tops and bottoms all the time. Well, look, guys, this ain't equities. We're in Cryptolandia now, and although we don't have VIX yet, right, or put call ratios yet, well, that's coming. Derivatives are on the up, but it's not really widespread yet. But we don't really have a widely traded options market, right? We don't have market breadth indicators. Well, sort of, right? I mean, that's what we're working towards to here with what we're doing, but it's not really, traditional measures. But what we do have is a crap ton of crypto market metadata, right, in the blockchain that is literally out in the open. And in crypto markets, we actually have much more data, and so we can do things we cannot do over in stocks and futures and options and what have you, because there just isn't the same level of transparency, right? As crazy as it may sound, right? With the signals we have put together, we've been able to gain every single every single major top or bottom within roughly 3 to 4 days. So, and you actually need to do that. Otherwise, it's worth nothing. So, and with that, we've marked 6 tops and 5 bottoms so far. The current bull market, it isn't finished yet. So being able to identify major peaks or troughs, obviously, is key. And a little bit later, we're actually going to revisit the reasons why this is key, and when it comes to trading cryptocurrencies. So, what's implications, right? Well, it's possible to trade only the parabolic, bull markets or exponential, which are 100 times the strongest stock markets, and cash out at the perfect time. That's the implication. And quite simply, this allows us to sit out all these emotionally taxing market corrections that the average hodler had to put up with. Sounds like yodeler. No more time wasted, with Reddit, our crypto, or stroking each other's feelings and and hoping that the current correction won't run too deep. You see these guys all literally, virtually hugging each other. Oh, I'm scared. No, are you buying? I'm buying. No, I'm not buying. I'm waiting. Okay, and of course there's always a bunch of them buying on every little dip, and good on them, because Bitcoin's a bit different than the altcoins, but we get to that. Anyway, unless you want all that, right? Unless you want that the full experience, the full crypto experience, unless you want that, I think you're a sucker for punishment, and I didn't sign up for that. So, and I don't know. I mean, I'm not making assumptions here, but I know some of you guys don't like crypto. On the blog, whenever I post something on crypto, I see the views actually dropping, and I was kind of been laughing about that. And that started even back in 2018 when I made this little crypto series, right? Series of posts on cryptocurrencies, like little introductions, blah blah blah, and how it works. It probably looks really silly now if you look it up, but it's and if it's still the Wild West now, it was really back then. But I see always the some guys are pros, but there's still a lot of people out there who just say, for various reasons. And it is unregulated, but more or less, right? It's all over the place. Well, we can agree on that, right? And the people who trade can also be arrogant cunts, really, as swipes, total zealots. I think actually I like the cunts better than the zealots, because the zealots really think they know something, and that's usually when I don't really respond very well to that kind of mentality. So, but if you could avoid the bear markets, right, then trade only the hyper-powered bull markets and then cash right out at the peak, would that change your mind? So what we're looking at here is a classic investor sentiment graph that describes the shift in mentality, right? I don't know if you can see my mouse here, but whatever. I just measure my mouse moving from the left to the right. That describes a shift in mentality or perception over time. And this is different from, examples like, let's say, the technology adoption model, right? That looks more like a bell curve, right? The traditional bell curve. And that has these slices, distinct slices. And we're looking at a gradual build up here, right? As opposed to that. We don't have a bell curve, we have a gradual build up. That's kind of, then kind of sort of goes exponential. And the last part here, that's, when you're looking, past media attention, enthusiasm, greed, delusion, that's kind of the mania phase when everyone and grandmother are piling into the market. It usually peaks out, right? When everyone is, shoe shine boys back in the days, and today, I don't know, what is that? Uber drivers, right, are talking about crypto. And you see the MSM, news about a new paradigm. I think it's something I was really to pay attention to, the new paradigm. It's never going to end, and this time is different, and all that jazz. Because that usually is the best time to get, GTFO, as they say, and look it up. Collect all the ill-gotten gains. Ill-gotten gains. Pardon me. What are groins? Groins, maybe those two. Collect all your ill-gotten gains, and then hopefully retire in style. That's the plan, right? So where are we in terms of the big picture? Well, since we didn't buy Bitcoin in like 2012 or 2013, we're obviously way past the smart money phase. So I actually bought my first Bitcoin in 2014 for $440. Yeah, God, a big spender, right? With a blockchain app. It was still an app then, and now it's blockchain.com. And so that makes me somewhat smart, but not smart enough for the Crypto Mensa Club, unfortunately. So institutional investors, have been streaming in lately, right? So like here, see that in the center, institutional investors. So, the likes of Visa, Mastercard, PayPal, those guys. And we're seeing also, and that's, I think it's really crucial actually, the emergence of crypto, ETFs. So roughly we're now a wee bit before the first sell-off, the little bear trap here. See that right here in the center? And that is really, in my opinion, when the first generation of cryptocurrency speculators are going to be cut into pieces. Not you guys, if I have anything to say about it, right? So anyway, this is about where we are. And it also means, though, on the upside, that we have this beautiful mania phase still to go. If you think we have a mania phase now, then you ain't seen nothing yet, which is probably going to take Bitcoin well over $1 million. Not a prediction, right? We're going to get to predictions pretty soon, guys. You're going to love this one. Maybe more, I don't know, maybe less, but more than now. And it really probably depends on how much money the Fed is going to conjure up out of thin air, right? Over the next few years. I mean, right? So, and after that, it's going to go all to shit, and the bear market will stomp all over crypto until most normies have completely checked out, completely given up on it. And then I personally expect to see, to be semi-retired somewhere at in a mountain resort somewhere with a few millions tucked away. And I want you guys, all of you, I want you guys to be there with me. Do this with me too. That's the plan, right? That was what we're here. Spending a perfectly good Sunday listening to this idiot. So the simple fact is that we're in the early stages of one of the strongest bull market in history, right? And I'll show you where we are, in the early stages a little later on. And honestly, guys, you only need one of these in your lifetime to walk off a winner. That's the idea, right? I mean, this right here, guys, this is a one in a generation bubble. I mean, it's a bubble, right? Let's be fucking clear about this. Easily on par with the tulip bubble, or South Sea bubble, like in the 1720s. makes the dot-com bubble look like a little blip, a little sneeze. Right? You really only need one of those guys in your lifetime. And this whole thing is going to happen fast. It's very much doubt we're still going to be, here in the current bull phase, like we have right now, beyond March of next year. I don't think so. It's going to be fast and furious, including the crashes. And I'd like to show you how to milk it for all it's worth. Right? Look, I'm 55 now. I know I'm looking at, and I most likely will be one of the biggest things I've ever seen in my lifetime, perhaps the biggest thing, right? And I've seen quite a bit in my lifetime, in my trading career. I do actually expect to live a long time, especially with, the medical advances and life extension treatments on the horizon. And, some of you guys probably caught that newsletter from a few weeks ago that everyone thought was spam. But look, even that, historians will be talking about the crypto bubble of the 2020s many decades from now. And if you're still around then, I hope you'll be able to brag that I was there. I'll trade all the way to the top and cashed out at the right time. So that's at least the evil plan. So, and if you think you missed the boat, I think you couldn't possibly more wrong. And here's, why. I mean, it's insane, right? Paying $60,000 for a freaking Bitcoin or whatever it is today. I don't think you couldn't possibly be more wrong. And there were actually several bull markets already. In every single crypto bull market, the majority of the gains have happened in the final frantic month. And what you'll discover today are the unique properties of crypto assets that they make a blow-off tops. They happen all the time. They happen 100% of the time, right? Like let's say 10 cents up to 30 cents, and then for $34 and down to $4. Right? Crypto always seems to be doing this. They always build these blow-off tops. And if you know anything about bull markets, some of you might have bought my price action course in the past, and they always end up in one of two ways. Either they go highly volatile and end up in a blow off top and then crash sort of lower, or they slowly they run out of steam, chicka, and then and then a few more pops, and then they start picking up steam to the downside before fall off the plate. So if you remember back in 2007, 2008, I'm going to put a sweater on. It's getting a little bit cold in here. It's actually freaking cold in Spain. I don't know how it is where you guys live, but forget about the idea that Spain is a warm country, because it is not. It's freaking cold here still in May, and has been cold here since October. I might as well move to the north, to the mountains. So anyway, there you go. Orange, my favorite color. So if you remember the 2007, 2008 crash in equities, something like that it can't happen in crypto because of the supply constraints in crypto. And we'll talk a little bit more about that as we go along. Every single time, we get a blow-off top in crypto. And it has always happened this way. And in next time, it won't be any different. So we can be alert for signs of a blow-off top. So we know exactly what a top looks like, because it's quite obvious in the crypto market. And how do we know? Let's go back a little bit in time here. 90% of the gains, were in 2014, were in the last month, right? And things go completely local for a while, and then gravity sets in, right here. Same in 2017, right? Here in 2017, this time 60% of the gains happened in the final months. So what are we learning from that? Well, all those outrageous jackpot returns really happen in the final months, and that final month is going to be super stressful time. The tape is going to go, exponential. You're making 100, 200 grand a day, depending on how much you've got in the, and how many dogs you've got in the game, right? and do your checking account every day, hoping that, it hasn't all evaporated yet. And after a few days of that, then the mentality flips, right? And all of a sudden you're disappointed you only made 20% today. And that, at that time, it's normal to start thinking about, quitting a job and living on easy street. And of course, you're not going to want to sell, which would be a mistake because the declines usually follow, I see exhibit B right here. They are pretty nasty. And of course, you'll be very hesitant, I promise you right now, to sell. If we tell you to sell, I bet you good money that some of you will be ignoring our first call to, GTFO because, just one more day. Yes, just give one more hit, and I quit. But hey, don't laugh. That is exactly what my buddy Scott told me actually a few weeks ago. So, for some weird reason, we didn't grab Doge, right? Guess no Doge, right? Dogecoin. Whoa, whoa. And that week, because we were still fine tuning the system. I was quoting Scott had some other guy quote something too, and there was some overlap, but my algo caught it. And so it turns out that, it didn't make it into the kitty. And the bloody thing shoots up 100% and then some. And Scott is cursing like only an Aussie sailor, right, can. And I'm like, dude, just relax. We made 20% this week, right? And he's like whining like a little bitch. You can quote me on this. I said it to him in face. I get away with that. But he could literally break me in half, as you know. You've seen the guy. Okay, I should have shut that down. Blim, sorry about that. I'm gonna kill my Thunderbird. Okay. All right, we're back. So anyway, yeah, so we made 20% that week, and he's like whining like a little bitch, about it. And of course, a week later, the recent correction happened. So which is a minor, given the big picture, but you get my drift. Right? So it's really psychological. You go through these motions. So the trick is in knowing when the big mania phases happen and when to get, GTFO, and we'll get to that. So this is my bold statement of the day. This is not a top. Crypto markets end with a bang, not a whimper. Only 10% gains in the final month. Based on what we've seen, this cannot be a top. And that's crypto markets as we know at this point, they end in a bang. They always do, and not in a whimper. And this is, it ain't a bang, and not just yet, while we have a while to go. And why, with only 10% gains in the final month, a long-term top, it's really doubtable. And if it is, hey, nobody ever has a crystal ball, me included, wish I did, but then it would be the first time in crypto history. It really would be. And, maybe then we have to check the system, but this would also mean that the underlying dynamics of how cryptocurrencies work have shifted fundamentally. And everything we've looked at says the opposite. We posted, this is not possible in the current environment. Again, I will elaborate on the reasons why. I don't make statements without backing them up, and I'm not planning on starting today. So this is a screen grab of both the Binance accounts we've been trading. Scott already pulled about half of his profits out on March 21st. So we started with 70,000 combined, right? And that was 420,000 he took out, and then 45K in the other account. And it's actually really a PITA, a pain in the ass to take money out of crypto. It really, really sucks. It's really hard to get it out. We'll actually cover that a little bit further down the line. So yeah, once we're approaching the million mark, right, 1 million mark, we're close, slightly below. Scott, bless his heart, right? Yeah, I love the guy, but he started to get really antsy as fuck, and he just didn't want to leave that much money locked in crypto. So I said, okay, dude, cash out some chips, feel better, move on, right? But no, honestly, I've been a pro trader since 2008, and there's no exact date, but I was trading since 2000 before. Okay, so maybe 1999. I'm that old, and I've been able to. I was still working as a software engineer until 2008 as a consultant. That was good money, but I hated it, and I needed to get really, I just want to make a big change. And I started also the blog, right? Evil Speculator. If some of you guys go way back and know me from then. Shout out to TK, Tim Knight from Slope of Hope, because he really gave me a big boost in getting into traffic. And, it would be impossible today, man. I mean, I never advertised ever. So anyway, so since then I support my family, right? Out of trading profits. And yeah, of course, the blog pays some bills, right? Not that many as you think, actually, but it does. And it's always this little tiny buffer, small buffer on the bottom that kind of, it's like, okay, it's always there. And that's good. But neither Scott and I have ever taken a withdrawal bigger than 100K from our trading account. Now, Thai Korea, I don't remember once, right? So, it's a kind of a big deal for us, for both of us. And at least Scott did it with the trading system I'm about to show you the next week, right? Because he took his share out, a part of his share. And the system is a completely systematic way of trading crypto. And if you know anything about me by now, then you know that I'm evangelical about trading systems. I don't trust my own opinion. I don't trust any third-party opinions or research. I most definitely don't trust any mofos on Reddit or some other harebrained forum telling me what coins to buy or what anything to buy. Because when you start getting into the backstory of some of those coins, it all just sounds amazing, doesn't it? Right? All that shit, it just presses my buttons, right? It makes just. I'm a technology nerd, so it makes so much sense from a technological perspective. And, it's distributed. I love distributed. That's anyone? Yeah, it goes way back. It's non-centralized. Kids, look it up. It's based on distrust, right, as opposed to trust. We've got rule-based contracts or Ethereum, NFTs, non-fungible tokens, and all that jazz, right? So what have you. And for a guy who grew up reading Neuromancer, William Gibson, I actually met the man in, late 80s in Austria, Ars Electronica or something. I never thought I would actually live in that scenario, but here we are, right? 2020 and beyond. But anyway, fuck. Just the whole idea of crypto and all that, it's one dopamine after the other. If I'm reading what this coins, I'm like, yeah, right. But that's exactly how you get killed. Getting emotionally involved and adopting the religion, because falling in love with all that stuff, and going deep and starting to join the cult. Basically doing exactly all the things I've been preaching against, right, for over a dozen years or so on Evil Speculator. When it comes to crypto, because look, I'm way too close. It's way too personal for me. Right? All that. I've never been political on the blog for obvious reasons. Not a good idea today, anyway. And but you know where I come from. Right? You can read between the lines, and I take the stuff very personal. I don't let it really come through on the blog because business, right? And bitching doesn't really look at Zero Hedge, right? It's fun, but as a trader, man, it can really kill you. And so if you're too close, right, if you make it personal, you're gonna lose. And that's one really big thing I learned in my trading career. So I have to get away from my own opinion. I need statistics to govern, my trading results. I'm all stats. I'm a nerd. I code a lot, so it's kind of in the blood. And I want these stats to define my alpha factors. Alpha factors, rules based on that allow me to identify opportunities in the market, right? An edge. Right? So, and I want these alpha factors to affect produce the systems which then control my process, right? So, over the past 2 weeks, the system has lost a bit of money, obviously because everything went down. It's all very highly correlated. But hey, we didn't stress about it because I knew that the system would switch me back over to Bitcoin. Right? It hasn't actually right now, but it would if it needed to, and not have me trade altcoins. But the rules are clearly defined, and that's absolutely crucial. I've always been preaching that, and I'm not going to change that today. Because when you're there in the trenches, right, when it happens, when this shit goes sideways, you're always going to be making the wrong decision. And I'm speaking about me here, right? I mean, maybe you guys are smarter than me, probably better looking at me, but it's that's just how I'm wired, and I'm not the dumbest cunt out there. I've been around the block a few times, and if I see that, maybe it's done in Kruger, but how it goes. Anyway, so by the way, the system was right. By the way, Bitcoin, at least last time I checked it, and I haven't really looked at anything for the last, because I was really working on this webinar until 10 minutes before we started. No, I'm not kidding. I haven't looked at anything, but yesterday was like 57K or so. So it's holding strong at least, and after touching 50K, not $50. No worries. So, but some may have panicked and run for the hills at the worst time. I mean, that's what we don't want to happen. So what we're going to be learning next week, I'll be teaching every single thing I know about building trading systems for cryptocurrencies, the little I know, and showing you the rules for my personal system. Okay. And I'll be teaching you from first principles how I derived the algorithm that you're going to learn, right? The alpha factors algorithm, the rules, etc. And you will discover exactly why and how crypto markets are different from stock, currencies, futures markets, bonds, what have you. It's different beast, man. It's different beast. And how can we design systems to profit from those differences? That is the $1 million question, right? So, yeah, I'll be showing you the evidence of how we tested it. Evidence is good, right? Better than bold claims. How we optimized it and then traded it with our money, right? In front of Scott's own mentorship group, live every single week. Scott has a few talented guys that he's grooming to be his trading slaves, now to be professional traders. And they pay him actually pretty good money for the pleasure. And everything we've been building really was acid tested in the group. So it's been an iterative process that, give me also a lot of feedback, right, on what the motivations are, what the weaknesses are, and how the design, how to design a system that people can actually abide by. Because it's one thing about this, this castle in the air, and that you think it's going to be awesome, and then and then you just can't abide by it because it's just esoteric or academic, right? I mean, it has to be a hands-on system that people can just freaking follow. Because I've actually sold systems before. On the blog, I had some systems running, and I know the approximate half-life time of how long people last. And it's usually, I was reminded of the trend trading. Who's the trend trading guy? Not Billy Eckert, no any of that, but one of the turtle guys, and the ones that kept trading, trend trading afterwards. So was it Sekoda? I think it was Ed Sekoda. And anyway, he did some internal checking, right? How many people were, running money with him were actually being profitable, and the majority weren't, because they kept always pulling out at the worst time, which was near the bottoms, right? And then they bought near the tops, and it's kind of like, it's the same thing, right? So it's a system has to work, and it has to also be tradable, and that's very, very important, right? And it has to make you feel good. Never going to make you feel good. Okay, let's take that back. But it's at least it's kind of like if you start losing sleep, then we're not doing it right. So anyway, so what I hope that I will to convince you of is to abandon hope as an investment strategy. To forget those coin tips and just like the hodlers, right? Just hodl on, and instead embrace a logical, very German data-driven approach, right, to generating crypto wealth, right? So that's just how I'm wired, and I hope that I can make that work for you. And the most egregious and dumbest ideas that common wisdom that I see peddled, that you should just buy some shit coins and then hold it forever like you would Bitcoin. It works great for Bitcoin, okay, but it absolutely does not work for altcoins. And it's critical. It's a critical thing. You guys internalize that and understand that, and we'll explain that also. because that might be one thing you're missing in your, as an investment strategy when it comes to crypto. And I show you a logical data-driven approach to wealth generation. That's really the goal here. So, and even better than that, I'm going to show you precisely when the crypto bull market is over and how to cash out at the perfect time without giving back any of your, some of you, not too much of your profits, not like 80%, okay? 10% might be in there, or 5%, but that's like that's a normal day in crypto land, yeah, right? Because look, when it's over, right? When it's over, it's going to fall like 80 to 90%, guys. And like it always has, right? And it most likely, that's how it's going to be for years to come until perhaps, the final halving. Final halving, that sounds funny. Do you guys know that movie with Christopher Lambert? What was it? Highlander? It sounds like that. There can only be one. Yeah, it's anyway, final halving, right? Because somebody says Richard Dennis. Yeah, Bill Eckhart, Richard Dennis. No, it wasn't him, but I just saw that. So if I got the name wrong, my apologies. Anyway, the final halving, right? With fire and brimstone, it's going to happen. But look, you're not going to be that guy holding the back, and trading crypto through a brutal bear market. Not on my watch. Not if I have anything to say about it. So I'm going to show you how to ride the crypto bubble right to the top and how to cash out at a very perfect time. And then, drop the mic and ride off in the sunset with your newfound wealth without having to suffer through a painful bear market. We don't want that, right? So bear markets, we leave those to those unwashed masters. So without relying on, unscientific tea leaf reading or prediction nonsense, moon cycles, Elliott waves, you know who you are, Fibonacci cycles, any of that wild ass guesses, right? We're not doing none of that. I mean, that doesn't even work in equities. So why would we do this? And I was on Reddit the other day, actually, and I got to throw this up. And somebody was posting, and he got like upvoted like a few hundred, no, I think it might have been a few thousand upvotes, right? You know what he was posting? He was posting a candle pattern map. It was like a picture of candle patterns. These guys, man, I mean, I was just laughing. So anyway, sad. Anyway, one more thing. You probably think that since I'm a semi-famous price action trader, debatable, I guess, but I'm now in a technical analysis guy. That's what the system is built around, and it couldn't be more wrong. I found actually that crypto markets move so fast and behave so differently in both in bull market, bear market phases. There's a much better way than relying on technical analysis. And you're going to hear me say that. Look, the crucial difference in crypto markets is that they are so fast and so violent that standard deviation is often, 3 or plus or more, and on a good day, right? 3 plus deviations out, standard deviations out. And so traditional technical analysis, right, mostly breaks down. So we are, charting, and it's a different paradigm, okay? And it just, it doesn't work. And we're going to go through why and how and why and what, right? So, I've been a long time technical analysis trader. I've sold, honestly, I sold nearly $1 million worth of courses, subscription systems, what have you, but, all based on technical analysis and for trading equities, in various shapes and forms, right? Option trading, everything, right? What have you, price action. And, even freaking trading psychology. So pretty well-rounded, I would pose, I mean, you guys be the judge, but, what I'm going to show you today is so much better than technical analysis that you would be able to do for crypto, because all that stuff, again, it simply breaks down simply due to the stochastics involved, right? There's too much noise, too much randomness. And the standard deviations are just off the chart on a quiet day. And so you can't do mean reversion on this. I saw somebody mention those two words, crypto and mean reversion, in one sense the other day on the blog, and I'm like, palm to the head. So it's not gonna fly. It's not gonna work. Traditional technical analysis it just can't keep up, with any of that. It can't. So here's the plan. Okay, I'll be teaching you four webinars, over the course of 1 week. Today, obviously, I demonstrated to you why the crypto markets are different. We already start talking about that. There will be more, much more. In webinar 2 on Wednesday, I show you, that's I think the 5th, right? I show you how momentum systems work. Webinar 3 is on Friday, and I'll give you the rundown on, optimizing and improving the system and how we did it and how we got it production ready. And last but not least, in webinar 4 next Sunday, I'll share with you the rules of what I so humbly have termed the automated wealth creation engine. Yeah, I am always understating things. I'm to a fault. Anyway, by the way, when I refer to cryptonescence, that's a name I came up with a few years back. And after working on the system, I decided to use it for that. So, and somebody raises their hand. I'm intrigued. Thank you, sir, or madam. Okay, and so yeah, I came up with that name, and obviously it's a wordplay on crypto and Renaissance. And once you wrap my mind around it and pronounce it, cryptonescence, I think it kind of rolls off your tongue just nicely. I think it's cool, but I'm weird. So if you guys think it's stupid, I might change my mind. So just FYI, that's cryptonescence, but it's the same system that Scott and I developed together. So, so you'll learn how to use the secrets contained within the blockchain itself, right? I don't know, a bit marketing speak here. Secrets. It's open secrets because it's all open, open in the blockchain, right? And it's out there, and if you know how to disseminate it, you can figure out a lot of stuff. And within the blockchain itself, there's all the cues you need to figure out, when there's a top forming and also when there's a bottom, right? So that's what we did here, actually, right? So last sell signal happened, and right here, and this is where we rebought, right here at Bitcoin, I think 4,890 or something. I don't remember the exact number. So, and then rebuy once the bear market is over. And I believe we can do this over and over again, and again, and skip all that bullshit drama in between, because I don't want to have anything to do with that, right? Just like mic drop and just come back when the getting is good again. So, and armed with that, you will completely avoid the average 90%, 80-90% declines in crypto that we've been seeing in bear markets. Okay, so. For example, what sort of trading approaches will work with crypto? Most trading approaches to crypto either don't translate well from traditional markets, or they require you to do 90% drawdowns at some point, and then just hold on. So again, mean reversion is a stupid idea. Someone mentioned this in the blog the other day, and I'm like, what? And talking about being a sucker for punishment. Look, pop up any altcoins, and we're actually going to do that. And just tell me how you're going to trade this mean reversion. How you're going to trade mean reversion that thing. It's like strapping a Testarossa, in front and plow a cornfield. It's just stupid, right? It doesn't work. And once we look, at those charts, you're going to see why. It doesn't take much of a chart. You don't have to be much of a chart reader to kind of figure that out. You don't have to be a Tim Knight to do that. So, but in a nutshell, too much randomness and standard deviation. That's why it's too crazy. It's off the charts. And if you're a guy listening, and I think probably most of you guys are, then that was not a macho statement, by the way. Just statistics, boys. When you were a kid, daddy told you to, use the proper tools to do a proper job, and then clean that shit up afterwards, right? So, use what works really, really well in the stock market and use what works in crypto. And if it doesn't work in crypto, then why try to use it, right? It completely breaks down in crypto markets. And most of the trading approaches for crypto, you're being told out there, right, involve you're taking like an 90% massive haircut. And you got to ask yourself, are you willing to do that? I mean, that's a loaded question, right? I mean, obviously I'm not. I've been looking on Reddit and various crypto-related forums for years now. And, recently, of course, also, you guys know Wall Street Bets, right? claim of fame was GameStop. And that was fun, man. I want to see that again. I was worth the popcorn. And the mentality I see is pretty identical, and it's kind of pervasive. Those kids really don't seem to give a fuck. That's really, it's just, I can't, I'm an older Gen Xer, and I just can't chime by that. Not look, I can't really figure out losing half of your money within a 2-week correction. That just appears to be the price of admission for those kids. And that may be fine if you're a trust fund baby, right, with too much money to play around with. But hey, I was actually always poor, right? And literally having been semi-homeless back in Germany for like a year back in 1980s, right? I was basically sleeping on the floor at my friends' places, right? One after the other until they kicked me out. All of them punks, by the way. We were all punks back then. Still have the holes in my ear here to prove it. And, all that experience that turned me into a penny pinching old bastard. Those were fun times, but they kind of form you that you are really, it frames some mentality. And for me, that's just not an option. These kids today, I don't give a fuck. It's just, I don't get it. I don't get it, but I'm old. I have no tolerance for monkey business when it comes to my ill-gotten gains, right? So that approach, just to hodl and to keep buying potentially on the way down, that just shit doesn't work for me, man. I mean, it doesn't sound like an active proposition to you guys either, right? I don't think so. If you say, yeah, I'm okay, please write in the comment section. I love to lose 50%. Nobody ever said that. No, see, nobody's saying it. So anyway, there's no shortage of mofos out there, giving coin tips and to everyone that's willing to listen. And, they're all as stupid and harebrained as the next one. And if you may have noticed, I've never pimped an altcoin on my blog. I've talked about altcoins, but I've never pimped them. Why do you think that is? Because looking for that one needle in the haystack that's going to explode like 100% or 1,000%, right? That's just not a viable strategy. And I'm never that lucky. I never get picked for winner. Fuck, I never do actually. And there's one big difference, and just by sheer necessity during my life, everything I do and all the systems I trade, they're all based on hard-earned evidence, right? Blood and sweat, guys, blood and sweat. I really go through the motions, and a lot of the stuff I do, you the guys don't even see, right? It's behind the scenes where you just waste months on some stuff that you think was like, the best thing since sliced bread, and then just like, it's nothing. It's got no edge. I'm going to talk about that on the blog. No, but I spend a lot of weekends, and my poor battered wife, doesn't get to see me. So God bless her soul. So now she's still alive. Don't worry. So anyway, so for me, it's got to be technical analysis, and but we're not going to employ traditional technical analysis when it comes to crypto, and but evidence nonetheless. And of course, it's, keep repeating myself, it's rooted in the blockchain. So guys, this is what we have to fix, right? If you want to trade crypto, right? If you come from the outside, if we're going to make this work, we want to be able to capture the full gains, or maximum gains, let's put it this way. And we have to learn how to GTFO at the right time, and before the proverbial excrement hits the turboprop, right? So, because it always does. So let's do, excuse me, a real analysis. I'm not used to speaking so much in public, anywhere, ever. Let's do a real analysis of the common approaches to generating wealth through cryptocurrencies, right? So, I love that movie. You guys love that movie? I love that movie. It's meme worthy. Anyway, I got this good friend, and he put a big chunk, Scott knows him too, of money into Bitcoin back in like 2011. We go way back. And, if you would believe it, 2011, I mean, what the fuck? I mean, it's crazy. I didn't take that shit seriously back then. Is there anyone in here who, yeah, great movie. Exactly, guys. Did anyone buy Bitcoin in 2011? Please raise your hand. Yeah, nobody. Okay. Yeah. Yes, you bastard. You lucky bastard. I mean, I'm happy for you guys, right? But this guy, he's got a fucking yacht, beachfront property, by the way, where it's, why is it always the beach, by the way? I don't like the beach, too much sand and too much salt. I prefer mountains, right? I grew up in Austria as a kid, I don't yodel, but I love the mountains. Anyway, he's living the life, tapping all kinds of pussy, right? Sorry, girls, not politically correct here. Traveling all over the place, all that jazz, at least until 2020 hit. Yeah, and, I'm happy for him, but that wasn't me, right? I mean, we can't do this, right? Unless this one guy, who did it? He said yes. Oh, what is that? Chris Hawkins. Chris Hawkins, you are a lucky bastard. Anyway, I sold it too. Yeah, okay, all right. Well, but you still count. You still count. All right, don't feel bad, man. I've done it too in 2014. We'll get to that. But so we can't do that. We can go back in time to 2011. I wish I could. And I personally was still getting my shit sorted with trading equities back then and building my business, evil speculator. And hey, I would love to hitch a ride back in the DeLorean and tell my younger self actually 3 things. Don't take, buy as much Bitcoin as you can. Don't take iodine. That's some of you guys might not get that. I have to have my thyroid, and then my eyes. Actually, it's why my eyes are a bit wonky. I still need second surgery. Taking overdose in iodine. I thought it was good for me, but I was sadly mistaken. Anyway, and then the last thing I would tell myself is move to bloody remote island before 2020 hits. But hey, we can't go back and in time, and that's that. And none of us has a crystal ball either. So by the way, this brings up another point. Just because somebody made his fortune with hodling Bitcoin or any other cryptocurrency doesn't mean he's got any special powers of predictions, right? It must mean they have an eclectic hobby, right? And it worked out for them. That's awesome, right? Good for them, man. Good for you, mate. They were, girly and being lucky isn't relevant to any of us predicting the next bull or bear market, right? It's not. So if you see somebody making predictions about the price of any crypto in 2021, so the logical question to ask is, what is your track record of prediction success, right? Dear sir or ma'am, did you predict the 2018 bear market? Oh, you did not. Huh? Yeah, you didn't. Did you predict the end of the bear market correctly? And not times, not like 10 times before you were right. Like, even stop clock is, right twice a day. And so, if you make 10 predictions, the same prediction over and over again, and it's always wrong, then don't. That was Proctor. Fuck you. That's what he does all the time. And there's a little wiggle down, and it's like, yeah, I called it, man. Bastard. Anyway, credibility in my book and trust has to be earned. I should know because I've been putting myself, balls out there for 12 years now, posting market analysis and a ton of setups and entries and who knows what for less 3 times at least a week. And so I know, right? So Scott has his friend, Laurent Benu, if you can pronounce that, and he's been working with this guy. He's a kick-ass trader, right? Hell of a trader. And he said something that really stuck with Scott, and he kind of passed it on to me. I became a tenant for both of us. Unless you predict the bear, why the fuck would you? He actually said, why in fuck? But would you think you're qualified to predict the bull? Right? So yeah, and that's true, man. Right? I mean, none of the people out there are making any predictions about anything, especially about crypto, are any good at it. So, do you think I'm full of it? Actually, I'm going to prove it to you. Let's look at a few of those more idiotic prediction monkeys out there. So, number one, John McAfee, the antivirus founder, right? By the way, just for the record, I love John because he's just absolutely hilarious. Have you guys seen some of his videos? I mean, how can you not like this guy? I mean, he's freaking obnoxious. And I mean, I'm on the floor. And I miss this guy. I'm really going to miss this guy. I mean, he's freaking fun. And the one thing I never understood about John is that why did he go up against the IRS? That's just freaking stupid. I know a few people who tried, and one guy tried to go, actually good friends with still, he went up against the SEC with some bullshit, and God, did he get slammed, man. I mean, it's a dumb idea. Don't fuck with the tax, man. It's a bad idea. Pay taxes, I know it sucks, but that's just what it is, man. Anyway, it's not a fight you want to win. You're going to win. You want to win it, but you can't. And many have tried and failed. So, and I hope that nobody calls him the promise that he gave, because he said that he would cut his wiener off if he was wrong, about Bitcoin at $1 million by the end of 2020. So he was wrong, right? And spoiler alert, yeah, he's going to die in prison. Anyway, he's writing in prison right now. And, the guy, I'm not going to say poor guy, he probably had it coming, but he was arrested right here in Spain, actually, right here in Spain early this year. I promise it wasn't me. I wasn't the one who ratted him out. Somebody else did. Anyway, the indictment is, so the indictment here about the altcoin pump and dump, it's bullshit, whatever. I mean, a lot of people have been running them off, but they're just going to, stick it up as, and going to make an example of the guy. Whether or not he deserves it, it's a different question, but he was fun to be around. I want to miss John. So here we got Pomp. Some of you guys know Pomp, Anthony Pomp. Pompilano, probably the biggest guy in the space, in Bitcoin space. His standard routine is buy Bitcoin, right? No matter what, buy Bitcoin. Buy Bitcoin, just buy it. Although, hey, I don't disagree with this general approach, this general premise. When it comes to Bitcoin, you simply, hodling on the long-term basis, it works. I mean, nobody has lost money this way yet. No matter, almost, at least up to this point, you would have had to buy it yesterday or a week ago or something like that. But majority of people have not lost, just hodling. And so what I do disagree with, however, are his predisposition towards making these calls, which continue to be way off mark. So, probably one of the most famous guys in the space here, right? Who prides himself on being able to predict crypto, not just by months out, like next week or something, but years ahead, right? And he's wrong all the time. I mean, it's Bitcoin hits 100,000, 7,550. Ethereum hits 3,000. It was at 140. Bitcoin hits 2,500. It was 44. And XRP hits 10. It's 20. Well, at least he this time he erred on the downside. So that's a new thing for him. So yeah, I mean, I think he stands alone. So there's actually a whole industry of Bitcoin predictors promising, to get their crystal ball out and help you. Yeah, and there's a reason for that. Why is that? Because what's the most uncomfortable part of being a trader? Anyone? Still talking about McAfee. All right, nobody. Well, in my mind, it's not knowing what the future brings, right? That's uncomfortable. I mean, if I could know what stock market is doing next week, well, would be much easier, right? so these assholes, literally, I feel very strongly about this. They're basically leeching off people's desire to grasp at any straw that when it comes to the future outcomes of their favorite cryptocurrency, and because it makes you feel better about yourself, it validates your decision, right? And it's just bought, let's say, 100 coins of Ethereum. Okay, and who are you going to listen to? the guy who says it's going to crash, or the guy's going to say it's going to the moon, right? And as human beings, we're just wired this way, right? We just sucker for this, this type of bullshit. And don't fool yourselves, guys. Everyone listen to a seminar right now. I'm late because my typing is so bad. Okay, all right, that's fine. Everyone, even this guy, especially you, is susceptible to this because, you know me from the blog for years, many of you guys, and I'm a pre-battle-hardened cunt when it comes to people making predictions, and even I need to work hard to not fall for this stuff, right? I really need to work hard. So this is what we did, Scott. Now we did some research and put together this growing list of renowned people in the crypto space who had been making predictions, right? John McAfee on top, right? Predictions about the future, and then we correlated with what actually happened. Right? So we have here, right? Linking from top, we talked about John Morgan Creek Investments, right? Predicted Bitcoin at 100,000 at the end of 2019. Oh, well, it was, we actually calculated what the percentage of error was, and it was 346% in this case, right? So, not so good, right? That's Morgan Creek Investment, right? I mean, you think these guys, it's the biggest hedge fund, investors in the crypto space. What we have, Daniel Diemers, head of blockchain at Price Waterhouse, right? 100,000 was prediction in January 2020, and where was it? Well, it was 346% off. It wasn't there. It wasn't 100,000. It's not today either, right? So Robert Schwertner, he's an influencer. Robert, also known as Crypto Robbie, you can look him up. Big influencer in the space, and he was very wrong, right? He was very wrong. Predicted it would be 8,000. It's not 8,000. Annie Chung, or Chung, I don't know how to pronounce this, but anyway, head operations at OKX, right? And that's actually the fifth biggest crypto exchange, and it's morally wrong, only half. Hey, don't laugh. That's good prediction in the crypto space, actually. So, going on, Alejandro de la Torre. Yeah, this years in Spain have paid off, guys. So it's Poolin, VP at Poolin. That's actually I think the third largest mining company, and he was wrong by 50% on nearly. Standpoint Research, Ronnie Mouse, those guys, excuse me, big name blockchain research company. Need to drink. Also wrong by 170%. Nexo is a blockchain-based lending platform, and they do some kind of instant cryptocurrency-backed loans. Sharks. And Tony Tranchev, he's a smart cookie, but he's wrong. TradeBlock offers crypto-related something. I think it's crypto-related products for institutional Bitcoin traders, and those are the whales, ladies and gents, right? That's TradeBlock, and John who runs it, he was wrong. So was Nicholas Merton, over at DataDash, which is actually one of the largest cryptocurrency YouTube channels, over 300,000 subscribers, I think. They've got a video I looked at today, actually, by accident, making predictions right on top, when you go to YouTube on their channel, there's like a featured video, and making predictions right there, and despite the fact that they are wrong. Adam Dash, CEO of Blockstream, guys, this is the company that sets the fucking rules for Bitcoin. If anyone's gonna know anything about it, this guys should know, and complete utter transparency, right? When it comes to the inner workings, I got all these data monkeys in there, like, crawling around and doing their thing. Access, I can only, a lowly monkey like me can only dream of. And this guy should know, right? But nope, he's wrong. Altcoin Daily, whoever. I think they mostly peddle altcoin news, and I think they're self-professed. Last time I looked them up, Bitcoin fundamentalists or something like that. Whatever that means. Either way, they are wrong. So we're working our way up the top list now. So Arthur Hayes over at BitMEX, basically that's some Bitcoin mercantile exchange. He's a bit better actually. And he got to nearly like 70%. So, slightly wrong, but, it's give credits where it's due. BitMEX Research, related. These are actually hardcore traders running the derivative exchange. That's being built. Really interesting stuff, And finally, here we got the CEO of Beam, and that's confidential crypto and DeFi, decentralization platform. Pronounced that one 3 times in a row. And he nailed it, right? I mean, dang, not bad. January 2020. But, we've got 20 guys here, and we've got 2 essentially needed, right? Him and Danny Scott over at Coin Corner, right? So am I going to start listening to these guys from now on? Hell no, because, lightning never strikes twice in the same place. It doesn't, So quite honestly, I think a random number generator may have done a better job here. And these are all top guys. These are not silly-headed monkeys like me. They would die on this hill, right? They blockchain, future money and all this stuff. And as a whole, they were completely off the mark, not even close. So nobody has a clue what the future holds. And so why in the name of all that's holy would you listen to these clowns, right? I wouldn't. So now, the sales pitch that you're usually getting, right, if you go into the space, if you really start like getting into crypto, and it's usually that, that random shitcoins is the new shit, that's going to be the new Bitcoin. Every single year there's that's new Bitcoin, right? The next year, it gets replaced by that's new next Bitcoin, right? And it's because it's like this ecosystem, it's a new ecosystem, or it's DeFi, or it's Lightning network, or whatever, right? And just this morning on Reddit, and guys, people are still spouting this stuff. I don't know what we're talking about, but yeah, it's this is hard to get out of these people, right? I think they want to see Bitcoin happen again, and every single thing that come across that makes sense to them is going to be the next Bitcoin. I disagree. So where's a tip, there's a tap. It's an old market thing. So, and this is probably a good time to look what I personally invested in, right? Some of these overhyped shit coins, and then how I held them through the great crypto winter of 2018 and 2019. So let's take it from the top here, right? Right here. Just 1 second. I'll go back. There, right. Okay, I'm sorry. I had another slide. Yeah, I knew the flow was wrong. So the biggest holdings that we had back then, NEO, ICX, ZRX, TRX, OMG, and Ethereum, of course, right? So by the way, if you have a favorite from 2017, put it in the chat right down below here, and see how it went. So let's look at ICX, right? Let me go back here. I placed all these windows, so I don't want to mess anything up. So let's look at ICX, ICX USD. All right. Here we go, right? But here at the beginning, right? But here at the beginning, that's when I, when I got it, and it just really was going gangbusters and went all the way to 12. See right here, 12, and some change, and then after 600% rise, it just crashed and burned. Right, it's nothing left, all the way down to this here. Right, see, and look where it is now. I mean, is it ever going back to 12 or above? Yeah, it is. It's an effing shitcoin, right? Or let's look at XRP. Okay, XRP, right? Ripple, and that one always comes up, right? I mean, it's getting there, but look what happened. Same thing. It's 2017. Look at that. It just went from what was it here? I mean, I don't know where you want to start counting, but 3 cents all the way up to $2.60, and same, right? So such a high correlation. Somebody says KCS, says Sean. Okay, let's do that. KCS, right? Christy. Did I? KCS, right? Didn't come up. Maybe I picked it wrong. KCS 2ET. Okay, I got it. Okay. Was it around 2017? That's the question. Yeah, it was. Okay. Okay, that's a good one. This one actually is the odd man out. This one is the odd man out because it's actually been holding up pretty well. KuCoin, right? Yeah, KuCoin, of course. BCN. Traded. Somebody says, Billy Collins says, December of 2017, I put in $400 in Coinbase, trade a few weeks, 147 left over in USD, traded Bitcoin and Ethereum. Okay. Battle stories. Okay, so BCN, double top anyone, right? Remember this one? I remember this very distinctly, actually. I remember this one very distinctly. Yeah, double tip is actually pretty rare, and because you almost never get a chance to get your money back once it's wiped out like that. And so kudos, right? I mean, it's actually, I don't know, I'll scroll over here. You know, this was your chance, right, to get your money back, but it's really rare. And today it's like a shitcoin, like, you know, it's what it's probably most likely, that's how it's most likely gonna die. Let's do XHV. Oh, I'm sorry, XHVUSD. Maybe. Okay, oh, right here. Yeah. So this one is holding up pretty well, right? So maybe right. By the way, I read the description on Apache the other day, and I'm just, my eyes just glazed over, and I'm as nerdy as they come when it comes to this shit. So anyway, this one, by the way, started after, right? After the Bitcoin. Is there anyone else? Any more coins do you guys want to see? It's a good project with a good development team. Yeah, you know, it is. I don't exactly extend what it's supposed to be doing. And you know, again, read the Apache docs on this, but whatever. It looks like a good project. It looks a lot more stable than any of the stuff I've seen, but it wasn't around in 2017. See, it just goes back this far. So, all right. Unless there are any more coins you guys want to see, let's go back to the presentation. So, Binance BNB is doing well, possibly the next online broker, says Sean. Okay, Sean knows more about this than I do. I just trade this shit. Okay, so I have to be honest, you know, some of these they actually physically hurt me to talk about. I mean, you know, this is me. I'm a pretty semi-well-known professional trader with a large following. And I personally got FOMO'd, you know, over many of these shitcoins, right, which I was holding. And many of them, you know, I held all the way through, right? I mean, in and out, right? Like all the other monkeys. And, you know, it's, maybe I should have known better, but it's, you know, things happen so fast, right? You know, so what I ended up doing, and so did Scott, by the way, we each bought about, you know, 5 Bitcoins, you know, 5, and more than doubled those to around 12 Bitcoins within like a month or two. And we both pulled those 5 out and put them on the treasury and just left it there. And, you know, I thought I was so smart, and, you know, I pulled my initial investment. It was safe, you know, and the rest was gravy. And obviously I wasn't very smart, right? I was very stupid, right? So very fucking stupid. Stupid you are, but you should not. So it's important to understand, you know, this phenomenon where, use the big words, Mike, where Bitcoin tops and riskier assets keep, you know, kind of streaking ahead. This is really normal, and reliably this happens in the blow-off top market. You know, in a blow-off top market, it climaxes every time, right? In every market, and in fact. This phenomenon, right, this blow-off top phenomenon, it has been observed for quite a long time in stock markets since the 1930s by, you know, Dow Jones, Charles Dow and Edward Jones. Those two cats, smart cats, they figured it out. Dow theory, anyone? No worries. I'm not going to charge you extra for the history lesson. But so it's that's where this comes from, and we've been observing this, right, in stock markets as well, right? So it's not a normal phenomenon, right? It happens all the time, but it happens extremely fast in crypto. So let's look at the excruciating detail of exactly how it really went down, right? So Bitcoin topped here December 18th, 2017, right? That's when Bitcoin topped. But some, altcoins took over, and most of the popular ones tripled in about, 2 weeks after Bitcoin topped. My holdings like Neo, Ethereum, ICX, OMG, and some, and then also some no account shitcoins as well, right? So they all went up, right? I mean, some really egregious scam coins were like doubling in a matter of days. Right? It was just a beauty to observe. And so here, this is Neo, right? And which I really like, by the way, which is usually a bad sign, right? And both and Scott actually like both Neo, and it just exploded higher. And then, look, I mean, it just lost 99% of its value, right? In the months afterward. And now it's back to what I think it's $100 last time I checked it. But hey, a little bit too late too little too late. I might throw in, this is something I threw in actually this morning, this slide, because this is funny. Because I mean, this is the point, right? That altcoins have a tendency to peak and keep running after Bitcoin. And it's something we observed actually before. And, been working on this for a while now. And then I see this actually last night. Take this link if you like, tiny URL. I'm old school. And look it up. This was actually just posted literally a day ago, right? Like by now, 23 hours ago or something like that. I just squeezed this in because I wanted to have it in there. And I'm loving the fact that Ethereum is moving independent of Bitcoin. Although Bitcoin started to tank a little today, Ethereum just reached a new all-time high around 2920, right? So exciting to see it moving on its own. This is only good for the future of crypto as a whole. Say this again, a lot of ideology involved, right? And maybe in the future, this will change the time we spend at bear market, because not everything's tanking at the same time. Yeah. So you hope, right? But this kind of confirms what we've been working on. I think for me, it was very rewarding to see this morning. I was laughing. I sent to Scott, and he's like, "Yeah, awesome," because it's really true. And we weren't just fooling ourselves, right? Anyway, so you might think, I was a dumbass for not selling, holding through, but look, I was still thinking stock forex term, or stock or forex terms or futures terms, and I'm used to fast movements, guys. Okay, I'm not exactly faint of heart kind of trader, but all this shit really happened really fast. I mean, it happened really fast, and before you know it, you're down 50% in a week. I mean, I'm not kidding. And these altcoins, they move so fast, and they're brutal in both directions. By the way, altcoin season, right? We define altcoin season, whatever you would call it, when altcoins broadly outperform Bitcoin by a wide margin. Okay, that's altcoin season, and you will actually see many altcoin seasons before this bull market is over. But we get to that. So, with that stock trading mindset, I got completely taken by surprise. And maybe I should have known better. But we all fuck up, and we all learn, and we all I don't know what cognitive bias it is, predisposition bias or something, but we always look backward, right? And that's just how it is, right? The vast majority of losses happen fast, right? And I figured it didn't owe me anything to do, so why, who cares, right? But I probably would have made my money back in 2021, right? But no. See, there is a phenomenon in trading which is closely related to human nature, right? Let's look at some of the overhyped shitcoins in 2017, and see how they held up in the 2021 bull market. Most of them are still below old highs, and we're going to talk about why this happens. Back holders always will sell, when they get their money back. When Neo finally gets to 200, just talked about Neo. Most people are going to sell. Why? Because Bag holders, they sell when they get their money back, right? Brian raised the hand. I think we're going to cover questions later. Is anyone complaining? Okay. Oh, wow. Tons of questions. We'll cover all this stuff later. So another one raised the hand. It's okay. Thank you. You're too kind, good sir. So this is all human nature, right? If we're holding a losing position for a long time, it kind of wears on us, right? I don't do it anymore, not often. It happened in crypto, obviously. But I know, I've talked also to literally thousands of traders, right? I've talked to thousands of traders. I know how it feels. And I know all these, and they all share this one thing in common, right? It becomes an ego thing. You get married to trades as well. That's another aspect of that. And as you talked about in my trading psychology class a little bit, you want to win in the end, right? It's like this thing, you can't let it go. And it really can kill traders. And it's this rabbit hole that is the human mind. And we definitely want to avoid that. We don't want to even touch that with a 10-foot pole. They just, no, we didn't skip a slide. Okay. Order, right? So now let's compare on contrast, the buy and hold strategy with Bitcoin. Look at this, right? Obviously, I must point out, this is a log chart, so it might not look very familiar to you. If you look at normalized charts on Bitcoin most of the time, but it better reflects really the kind of psychological up and downs, right? The actual losses and wins over time. And a linear, chart wouldn't do that any justice. So look, if you bought anywhere here, you'll be fine. It doesn't matter if you bought here or here, bought here or here or here. If you bought here, that was good, right? But you'll be fine. And this is bloody crucial to understand, guys. Bitcoin does not behave like altcoins, right? It doesn't. Spoiler alert, it's voodoo magic. Now, in a few minutes, we'll discover exactly why Bitcoin always comes out on top and altcoins don't. Sorry, we're only halfway through and my voice is already going. So, summarizing so far, right? Buy and hold, right? HODL doesn't work very well for altcoins, but it does for Bitcoin if you can stomach 85% declines. I don't know if you guys can. I personally don't. I really appreciate that. Following predictions of big name gurus don't work at all. We've already proven that, right? Remember all those monkeys. Altcoins that suffer big declines struggle under the weight of bag holder selling pressure, right? And the fastest gaining coins in the next bull market will not be the same as in this bull market. So think about it, right? What are the Bitcoin hot coins right now? Like DOT, right? Sushi, Uni, Uniswap, Chainlink, right? Link USD, Luna. All these, they were nowhere back in the last bull market. They were nowhere. Right? And if you think of the hot coins of the last bull market before that, like what NEO, ICX, right? So I can OMG, love that one, TRX, etc. They were nowhere in the bull market before that. The preceded, and that is kind of the phenomenon that we also saw in the stock market right before. Do you guys remember Yahoo? I don't know. Yahoo was like the most hated stepchild back in the days, right? And it's shit now, but it just kept going up, and everyone hated it. Everyone wanted. It's like nobody could believe it, right? That was before the .com bubble, and just everyone hated Yahoo, and and that's why it kept going up. I just looked at this and myself was like, what the hell, it just keeps going up. Still was earning my stripes back then. Do you guys remember Cisco? I actually worked for Cisco as a consultant for like a year or so. Yeah, so you had stock options. AOL. A good friend of mine sells an AOL address. Every time I send an email, I wonder if it's still working. So that was the shit back in the day, and Amazon was just a blip, right? It was a penny stock, back then. So today's hot tech stocks were nowhere in the last bull market, and when that set of stock of tech stocks was, everyone could talk about, right, in the news and everything, and also on online. And in investing, we refer that to, the generals fighting the last war. It's that type of fallacy. It's like designing a strategy that worked for the last war doesn't necessarily hold up the next one. So a good example of that, maybe everyone who's American cover the years right now, Korea and Vietnam. Right? Korea was, fairly easy, right? Similar vegetation, similar terrain. I've been actually in Korea. It's a beautiful country. Mountains. Southern Sun, I think, was the mountain I went hiking. It was brilliant. It's like freaking Yosemite. It's beautiful. I want to go back. And, similar vegetation. Actually, North Korea has some of the best mountains. Wish I could go. I love mountains, as you guys have learned by now. So anyway, but similar terrain as the US, that we're able to train and everything. And compare with Vietnam, right? Just a freaking nightmare. And they dropped crap loads of napalm, right? Crap loads of napalm, just so they freaking could see and actually kill the enemy, right? And so you don't want to fight the last war, right? You need a new strategy for a new war. So moving on, let's get to the good stuff. Why are crypto markets different? If we can understand this, then we're much closer to solving the riddle. If you take one thing from today's presentation, then it's really this. User behavior is radically different for long-term, held Bitcoin. It is. It's radically different. Okay, so this is going to be a little bit technical, so don't run, right? Am I muted? Something says I'm muted. Okay, hold on. I hear you. Okay. I have some kind of recording alert on here. It says that might be from before. I'm gonna press it. I'm gonna blow it up. Okay. Can you guys still hear me right now? So somebody say something. Okay. All right. Awesome. All right. Sorry, guys. I saw this thing down there. Must be a glitch in the software because it still showed that thing down there. I was like, oh my God, this guy's, I've been muted for the last hour. So anyway, we're going to get a little bit technical, but don't run. This is not too bad. This is basically probability, right, of a coin being sold throughout this life cycle. It says UTXO down here, right? That's an unspent transaction output, which is kind of a nerdy way of saying, of referring to the change you get when you actually spend Bitcoin, because you basically, it's like almost like a bill, right? And you get the Bitcoin and then you get some back, right? Whatever you have. And so what you get back is your UTXO. Right? And so from there, when you get that back, by the way, Ethereum works a different way. That's a different topic for a different day. Very nice. I love statistics, says Billy Collins. Awesome. All right. My kind of guy. Go Billy. So people with itchy fingers, right, who just got some crypto, what are they going to do? Right? They're going to buy some drugs, some SARMs, steroids, whatever, discounted little blue pills, happy pills, let me count. Maybe, hey, if you're sophisticated, an NFT or stupid, pick your pick, non-fungible token, that's all the rage right now. So when you just got these coins, right, the odds that you're going to spend it on any of that stuff, you're going to, sell it, right, for something within the next 2 weeks, right? That's kind of like the measure here, 14 days. That's how it's being measured. The odds of that is 78%. That's quite high, right? And that sounds about right, I think, right? I mean, I know myself too. I don't know what you guys, right? So if that coin hasn't moved for a month, however, right, it only has like a 10%, 10% chance or so of being moved. And now all those coins, right, those UTXOs, right, unspent transaction output, as they age, right, as they're not being spent, after about like this inflection point, right, this threshold here, right here, 155 days. That's what it is. I should probably put this on the chart, man. But anyway, 155 days, it's where you hit this inflection point. And it's important, a very important moment, because once you get that, the odds of those coins not being moved for many years, right, for the long term, has increased over 95%. I mean, it's almost you're very, very likely to hold it there. You're just not going to spend it, right? Because once it gets to there, it's probably going to stay there. It's there to stay. It's just like, it's parked, right? It's frozen. And hey, by the way, just to clarify, we're not even talking hodlers here. These are stats based on short-term traders. So what does that mean? It means you have to take another sip of tea, Mark. It also means that they may be put on a disk or Trezor, right? Like I did with mine. And it means that a private corporation, perhaps, right, may put the key on, cold storage, paper wallet, cutting it into quarters, and putting those quarters into 4 different safes. It's a good way to protect it, especially if there's real money involved, right? It would be some highest, right? Wow, somebody's got to do it. Anyway, it means the money isn't active on the exchange. And that's kind of like the takeaway here, right? And by all that, it means that activating and using these coins, right? These parked coins is a pain in the ass. And very few actually do it. And there's also psychological aspect to all this because, look, you have taken out circulation and you like it this way. It's your thing, right? You believe in crypto and even Bitcoin, whatever you believe in. That's your nest egg, right? And you want to keep it this way. And because otherwise you wouldn't have made the decision, right? Nobody puts a fungible fiat currency that you can spend, right? And puts it into something like crypto, which is extremely hard to get out. Right? Because these coins, right, they go off exchange, right? In cold storage, whatever, they can't easily be sold. And this friction, right, referred to this as friction to actually selling, where long-term holders have to get the coins out of cold storage, until, whatever. They have to get it out, get it on the exchange, sell it at exchange, then order wire transfer out from the exchange. And, it means long-term sellers, they are not shaken out by these little wiggles in price. They're not. So, it's just too much of a pain in the ass. It's just, you have to convert those coins back to tethers, switch it back to real money. And then, the wire transfer and all that takes time. And it's generally a real pain in the rectum, right? And it means, long-term sellers, they're not shaken out very easily by large fluctuations, right? In price fluctuations that would scare, the hell out of traditional stock traders. The effect, of all of that is that, a large percentage, about 78% actually, and that's saying, just 2 standard deviations, are long-term traders. They barely check the price, right? And if it drops by 30%, they just laugh it off. I mean, it's price of admission, right? Perhaps even, beat the FD, right? So not the type of sentiment that I see very much happening over an evil speculator, quite the opposite actually. And that's really the big difference, right? It's the friction of getting out. And in any market, especially, a rising market, if there's a lot of friction to the downside and very little friction to the upside, it's fairly easy to get in, what is the market going to do? Well, it's going to keep pushing higher, especially during the bull run. And that's why, we keep seeing those vertical spikes, in crypto and especially, in altcoins, right? Especially in altcoins. So, we summarize, this is not the same as the stock market. Right? This is one of the key differences between stocks, currency, futures markets, options markets, highly liquid, right? Highly liquid. And, crypto markets as well. That's just, crypto markets are different, right? It's, they're a completely different beast. Right? And this is very important to understand. There's significant friction to turning a Bitcoin into cash. There is. And, if you sold your stash of Bitcoin when you went up like, let's say to 1,000, I think, what was that, 2014, 2015? You would have felt like you were pretty damn clever, right? For like a minute or two, right? But would you say the same today, right? I mean, I remember in 2014, I bought my first Bitcoin. What do you think I did with it? I spent it on bullshit, you know. So most people did, and stuff I couldn't, you know, maybe I didn't want to buy on the regular market, right? So as a whole, Bitcoin holders have been conditioned, you know, or conditioned, don't bother. I looked it up already, like Pavlov's dog, to sit through the most, brutal bear market corrections, and that would make the average stock trader recoil in sheer horror, right? I mean, I'm not selling my Bitcoin. I'm not. I'm holding that shit until kingdom come, at least for now, until I see some signs of, turbulence that I think I want to, avoid on a long-term basis. Sean says about a roll of silver eagles with one Bitcoin for 350. Yeah, silver is a very good investment strategy. It should be part of everyone's. There's always this thing about precious metals against crypto. Yeah, precious metals haven't held up. Okay, but it's a completely different beast, and it's good. I pick that stuff buried in a yard somewhere where nobody else knows it. He says that was in 2015. Yeah. I love, unless, as long as it's real, as long as it's physical and not some BS, right? A paper silver or something that's in, what price did you get, Sean? What price did you buy it? I don't know. Didn't say. I hope you didn't lose money. Anyway, so, silver, don't go find the other paper stuff, get or gold, get the real stuff. So anyway, there've been conditions, and long-term holders don't want to sell. They don't want to, get rid of the Bitcoin until they are really and truly ready to sell. Okay. And so I refer to these guys as the strong hands, and we can really watch the behavior. We can watch their behaviors on the blockchain, right? For signs they're selling. And, so because the blockchain, it has that data, and we know who are, how many are strong hands, and we know how many are the weak hands, and we look at the data, we slice it and dice it, and at heart's content, that's what I like to do, and that's what we did. And what do you think? What happens when people bought Bitcoin at $10, or hey, even at $100, right? What happens when those lucky mofos finally start selling? Well, you know that answer, right? That's basically when it's all over, and that's the end. Right? Actually, there might be some millennials that may disagree with that, but let's not go there. I guess talk a little bit lower because my voice is actually going, and we're only halfway through. So, a market is made of two sides: better buyers and sellers, right? And I don't think anyone disagrees with us, right? So let's look at the supply side, right? This is pretty basic, right? There are only 21 million Bitcoins that will ever be mined. I think most people know it by now. And of those, 21 million, Bitcoins released in the market, from blah, blah, blah. Okay, and actually, there's 210,000 blocks. Someone screwed up this slide, whatever. That's been the halving occurs, right? 210,000 blocks. And we're now, I think, a little bit over 680,000 blocks last time I checked it. And there goes another block. So, which means we have to buy 3 times, right? And the amount of Bitcoins the miners get as a reward for keeping, the network running, it keeps dropping, right? So that means that the miners consistently have the biggest pressure in the market. And we can glean crucial clues from what those guys are doing, because everything they do is on public record, right? It's all on the blockchain. That means mining, is basically tantamount, is, converting electricity into Bitcoin. That's basically what it does, right? Computing power. And that is another key difference between crypto and traditional markets. So we're going to get a little more nerdy here. So bear with me. This blue dotted line here shows up. It shows us how many coins are actually coming onto the market from miners, right? And you see, it was very easy to mine Bitcoin back in the days, right? You could run your old, 2010 Dell, dude, you got a Dell. Yeah, remember that guy? And you could run it in a closet and mine yourself a few Bitcoins. And those were the days, and I actually know a few guys who did it. My buddy Tony, right? He did it. And then it got harder and and you know, as you can see, the slope kind of continues, right? That's kind of how it droops down. Now, if we superimpose the actual price over the supply that comes onto the market, right? Well, what do we get? What we get is basically a stock to flow model, and that's what it's called. And the stock to flow model measures like the relationship between currently available stock versus the the production supply. And it's I have to apologize for my voice. It's typically applied to precious metals and other commodities, but we believe it's also applicable to Bitcoin as well, especially since Bitcoin it is viewed as a scarce digital resource. And in fact, it was actually the first scarce digital resource in history, so I know of. Somebody in comment section is going to correct me now. So keep it lubricated, Mike. Keep it lubricated. So this has tracked the history of Bitcoin price evolution. I think pretty closely. You would agree, right? And if you project forward from where we are, then in 2027 or something, somewhere around here, maybe close to $1 million. I mean, I don't know, what the fuck. What the fuck I know? I don't know anything. But this stock to flow model has been pretty close, and I think I'm going to stick with it for now until they prove them wrong. But what's important to understand here is that the supply goes down every time the reward for miners is being cut in half. And we're still some ways out until the next one. And this is really crucial to understand, understanding Bitcoin and most other cryptocurrencies, right? And, we've got 680,000 blocks, and, we're giving that we go to the next halving every 210,000 blocks. We're scheduled to have again, when? 840, right? 1,000. And we've got ways to go. We're only at 680 right now. So this controlled supply, is really key to understanding Bitcoin's long-term perpetual rise. It is. If this stock to flow model holds, we will eventually, sooner or later, see Bitcoin at $1 million plus, right? So new coins are always coming onto the market at a decreased rate, So what other factors? That's what we learned. So what other factors are out there? Well, didn't say the magic word. Remember that, guys? You forget your password, right? If you forget your password, you shit out of luck. There is no reset password button. And in fact, estimated 3 million Bitcoin have been lost this way. I don't want to be that guy. And some people have died with their private keys as a secret, or thrown away on old hard drives. If they died with it, maybe they get to spend it in heaven. For me, that would be in hell. But either way, they're in auto circulation. They're lost. Maybe some of them will be found, right? And the other whales in the market are the exchanges, right? So let's look at how many coins the exchanges have available for sale. Did I skip one? No. Good. Okay, next one. So this is actually very interesting. This orange line here is the Bitcoin, okay, what is it? It's Bitcoin percent balance on exchanges, right? So they're up here on the left, right? And right here at this market low, the exchanges start to, really run low on supply, and it continues to drop, right? See right here. So there's this market low. Right here. And so since it from here drops, right, continues to drop. And so what we have here effectively is a supply shock. If we have less coins to sell, that produces increased buying pressure, right? And that coupled with increased, selling pressure. So this is decreasing selling pressure. And this is why the price keeps going up, and as long as this doesn't swing up, we're just basically, the downside has too much friction, right? So anti-money laundering laws, which are strict, especially in the law in the USA, it's another factor, right? As a general proposition, it's a pain in the ass to get your money into crypto, easier than actually get out a lot of times. It's really a pain in the ass to get back out. And this friction makes bull markets stronger, and it makes bear markets, stronger as well. The market, I love this quote from Nassim. The market is like a large movie theater with a small door, and the best way to detect a sucker, like Safiu's and I, right, is to see if his focus is on the size of the theater rather than that of the door. So there's this supposed, multi-trillion-dollar market cap, but I can vanish very quickly because the door is very small. And once the game of musical chairs stops, eventually the jig is up, and you may not be able to get out in time once everyone's rushing for the doors. I mean, this would never happen in the stock market, right? I'm kidding, obviously. Happens in the stock market as well, but it happens especially, it has happened before, and it's going to happen again in the crypto market as well. So in crypto, the market cap is the size of the theater, and the liquidity is the size of the door. And, again, as I said, panic situation when everyone rushes for the exit, massive moves are going to happen, have happened, and they'll happen again. So one more thing more factors are stable coins, right? Like Tether, True USD, sorry. Pax Gold is another one, if you guys, into metals. USD coin, I mentioned right here, Binance coin, all that shit. And, these stable coins, they allow non-real money exchanges to function, because you can't swap Bitcoin for USD at Binance, the largest, which is the largest exchange. But you can trade Bitcoin for USD tethers. And what is a tether? Well, it's a fake USD. It's a fake dollar. That's what it is. That's kind of ironic, right? Given that the entire, raison d'être for crypto was coming into existence, right? Was a counter to fiat money in the first place, right? I mean, when was Bitcoin introduced? I mean, when was the white paper written? Was it 2009, 2010? Don't remember exactly, but it was post 2008, and there was a reason for that, right? We all know what it was, but alas, right? So in effect, tethers get printed out of thin air, just like the Federal Reserve prints US dollars. And in the same way, money printing makes the stock market go up, and tether printing makes crypto markets go up. So how is stablecoin printing kicking off the bull market? Here we're looking at stablecoin supply ratchet in a way. It's like the ratio of stablecoin supply and basically lower values, right? Lower values mean more stablecoins are being printed. So it's like an inverse relationship. Okay, clear? And here on the very left here, see it's falling. The market is kind of going sideways. Price is falling as well. Here it's kind of like sideways, up and down, false price. But I think focus your attention here on the right side, right? When the exchanges started printing tethers, right, like crazy, that's really when it picked off. And so, yeah, as you can see, right, crypto markets in a way are manipulated. Oh, yes, they are manipulated. You want to believe it or not. I mean, there's some monkey business going on. Whether or not that is, moral or not isn't for me to say. I just work here, right? That's my old motto. But what I do know is that when I see this stuff one day, I'll be paying very close attention for obvious reasons, right? So to summarize this far, excuse me, the crucial difference between crypto and traditional markets are friction in getting money in and out. Exchanges and whales dominate the market. Stablecoin printing is unregulated manipulation. And the fact that long-term holder behavior is very different, right? All that is friction against, that we don't really see to that extent, at least in stock markets or futures markets or whatever, options markets. So we've got basically, three groups of traders, right? And basically, that it produces three kind of avenues that produces supply shock, right? Coupled with like a demand shock. And the demand shock comes from those three, retail, corporations, and Wall Street. And like retail money, again, here's the orange line, right? That's retail money, number of addresses with a non-zero balance, right? These are addresses that actually have money, right? We all have friends or know somebody who's piling into crypto, or somebody who's been bragging. There was one guy on my blog who kept, bragging a few months ago until he was dealt with. These guys, we all know these guys, and they've opened their first crypto accounts. And we also know many that have opened crypto accounts just in the last few months, right? So money keeps streaming in, right? And it's accelerating. If we zoom in here a little bit, you can see that in recent price dip, even during the recent price dip, more accounts were funded, right? This is crucial right here, right? Feast your eyes on this. Even as price dip, more money flowed in. I think it's just freaking fascinating. So, in terms of institutional money, who's piling in? BlackRock. BlackRock is huge, right? I looked it up the other day. I think it's $3 trillion that's under management in BlackRock globally. Trillion, okay? Not billion, not million, trillion. It's just this is the biggest financial conglomerate in human history. It's huge, and they're piling into crypto. What does that tell you? Tesla, say no more. Ellen, I want my Starlink. With my wife and I found this amazing house in near National Park here in Spain. It was beautiful. Oh my God, with garden, everything we want. A mountain where I can fly I built quadcopters, so it would have been awesome. But no connectivity. So we tried to make it work, but you just get you have to put an antenna up somewhere, and we just couldn't make it work. So we didn't get the house, and it just sucks. So, and I just know next week I'm going to get an email from because I'm already on the list. Anyway, Tesla, he put a lot of money on Bitcoin. I guess you guys all remember, Alan put a lot of money into Bitcoin. It was company assets, I think, even, right? Was it personal or company? I don't remember. If somebody put it in the chat. But a lot of money is flowing in, and he's got the ear of a lot of people. What he does, Elon Musk it's just it reverberates around around the entire market, around social media and everything. He's got the ear because he's kind of semi cool guy. He's smoking joints and all that, being interviewed by Rogan and shit. You want to be that guy, I guess, whether or not you hate him or not. And he's into crypto. So, Larry Fink is, oh no, don't go there. Jesus Christ. Jesus Christ, don't get me started. Don't get me banned, please. Okay, so MicroStrategy, PayPal, Visa, Mastercard, right? Master, I'm sorry. All these large institutional, money is piling into crypto. Big corporations, Square Inc., Marathon, Coinbase. So it's the Argo blockchain right here, Bitfarms, Citadel. You guys know Citadel, right? Yeah, I know Citadel. Those mofos, man, they're hardcore quant traders. So yeah, so this is some serious shit, okay? This is, somebody says ESGD and investing, that's what I meant. Okay, whatever. It's okay. We're not really politically correct. Just don't get me banned from anywhere. So the final factor increasing demand is the Wall Street, the Wall Street money in ETFs. And that's such a big one. There have been a few ETFs that have been created now. But what many people don't know is that there's a lot more in the waiting loop at the SEC. And I mean, institutional money wants to get into that so bad, right? There are a lot of applications out there, and that hasn't even hit yet. And what has hit, Grayscale ETF, but 650,000 Bitcoin. Do the math, right? I mean, that's with 6.5 million mined. That's what 3.5% or something like that. That's massive. That's 3.5 whatever percent of all coins in existence. Somebody doing the math of all the 18.6 million that have been mined. Think about that for a second. Just by in ETF. What happens when all these other mofos get their ETF? Where's it going to go? Right? I mean, I'm just posing that as just let that roll around your head for a second in your mind. So, I bet until now you thought there were no fundamentals in crypto. I guess I beg to differ. And I never thought I would say that because I'm not a fundamental trader, as you know. I'm a totally different type of trader. So, I'm getting towards the end here. So we can divide supply into three different buckets, right? Almost made it to a whole pot of tea here. Liquid, highly liquid, and illiquid, right? And you can see that the blue, which is actually the illiquid supply, is steadily rising, and it's also a huge percentage of it, right? So majority of all that supply, all that liquidity, is sitting off exchange. It's literally a lifetime asset for these guys, right? And this is basically caused by Bitcoins, the buying of Bitcoins and putting them into, like we discussed, cold storage, which means they are off the market. They're off the market. They're hard to get to. They're very hard to become liquid, right? It's a lot of friction. So 78% of the available supply is now illiquid. Think about that. Right? What are the implications? What are the implications of that? Illiquid coins never get stop loss triggered. Right? They don't. A single day drop, no matter how big, doesn't shake them out. It doesn't. They don't sell just because they just made maybe 20% for them. 20% is nothing, and it takes something really extraordinary for them to sell their crypto. And it will be very, very obvious when it happens. When that moment comes, right, it's going to be very obvious. When these mofos are selling, right, these guys right here, it's going to be very obvious, right? We're going to see some disturbance in the force, right, as they say. I'm afraid I've sensed a major disturbance in the force. Oh, that was horrible. Okay, I'm not going to do any more impressions, especially Star Wars. I actually met him once, actually. Yeah. Mm-hmm. Yeah. Many years ago. I didn't do my impression, fortunately, but actually, that's a different story. When I was into 3D and all this. Anyway, so the thing you may not have considered until then, George Lucas I was talking about, obviously, is that when this liquid supply actually sells, right, that's when it's finally over. That's when it's finally over. And because this shit, this is, pardon my language, but I mean, it's very strongly about this. It's like sex with a gorilla, right? It's like having sex with a gorilla, man. It's not over because you say it's over. It's because it's over when the gorilla says it's over. Or the person may be wearing a gorilla suit, whatever floats your boat. But it's over when it's over when the gorilla says it's over. And it's going to be serious when it happens. And we have the technology to monitor that, and that's key, right? Otherwise, I'll be wasting your freaking time. Got better things to do on a beautiful Sunday. So I really want you to understand. What I really want you to take away here is that this bull market isn't random or lucky or manipulated. Well, a little bit, right? As we saw, it was basically kicked off by the decreasing supply and increasing demand. Which is what we did cover today. And the rising prices attracted, new buyers, right? Gains beget more gains, you know that, and that goes on until it ends in one way eventually. It can only end one way, right? It's blow off top, right? And it again. Remember, this is a log chart, right? This is a log chart. So these beautiful blow off top climaxes, right? And they're really for the record books. And see the signal, right? I mean, we have thresholds for that, right? And so we also, we know that every single blow off top has been bigger than the last. It's just a simple aspect of reduced supply, paired with increasing demand. Makes sense? So, here I am making stupid predictions, right? Which is probably, going to be wrong, just like all these other mofos before, we talked about, I was pitching about before. But, based on what we know, let's take this as a possibility, right? 200K, 300K in early 2022. Let's see if we can get there. Hey, maybe we're going to be complete off the mark. I don't think it's really so much about the value. I think we're going to see 200, 400K. The question is when, right? That's really the question of when, and nobody can predict that. So, buckle up, guys. Buckle up. What was from the Matrix? The quote. Buckle up, Dorothy, because we're about to make some serious fucking money. That's the plan. I mean, I'm not gonna fuck around here. I've worked on this for the last year. It was a shitload of work, a lot of weekends, and I was actually working on other stuff. I dropped everything. I was working on a different project, actually. I was actually implementing Scott's Holy Grail stock trading system. And I actually was 98% there. And I actually dropped it. I dropped it like a hot potato and started working on this because it was like, wow, I'm going to start looking at this and working with Scott. So this is the plan, okay? I'm going to ride this fucker all the way to the beach. Actually, in my case, to my luxury alpine mountain recluse. And you will never hear from me again. I'm just kidding. I usually get bored after like 3 days, of vacation. I just get bored out of my mind. My wife has to keep me away from the laptop. So most likely I'll be back, 2 weeks later. But hey, until I get bored, I'm going to take some serious bloody sabbatical, and that's for sure. And that's going to require a little bit of work, right? But for everyone. But as you can see already, I think, or you can hint, I've been hinting at, Scott and I have already done a lot of the heavy lifting for you. And when it's finally time to cash out, that's, please listen to us, because that's going to be the time when exiting will be really crucial. So when you see us, scream sell, just, you can't fuck around and wait another day or week, just GTFO, right? And as instructed, like this. Remember this? Like this. That's how it's gonna be, right? It's literally just worse, right? Sell. Anyway, without a heart attack, obviously, right? So when we're going to the next webinar, if you guys care to come back, and I hope you will, we're going to start working our momentum trading system from first principles, right? And I really want you to have a deep understanding of this. And the work is going to get very technical and detailed. And before I say goodbye, there were some questions, right? Will there be a recording of the webinar? Yes, there will be a recording. Okay, there's also comments coming in, so we're gonna take it off the top. Sorry guys, I'm not used to all this. I've really suck at multitasking. Let's do the comments first. Sex for the gorilla, LOL. Yeah, okay. Scott came up with that one. Just, Aussies, man, they make the best. They're cursed. You can't compete with these guys when it comes to these kind of quips. The CME is launching micro E-mini Bitcoin futures tomorrow, May 3rd. How the fuck I did not know about this. See, this market is huge. I mean, margin to trade on one Bitcoin is to be 10% or 5.7K. Really? 10%? oh, what's the worst that could happen? What could possibly go wrong? It seems like some of the friction that discourages trading may be dramatically reduced for or at least the futures trading cohort. Thoughts on the impact of this development? Any impact on your model? Very good question. I really don't think so. It's going to have a large, okay, two answers to that. Short term, no. Long term, yes. Because, I mean, the sheer fact, who actually asked this question? C92673. Okay, I'm going to remember that name. Because the sheer, remember the story about, on Reddit, the guy got all the upvotes about the candle patterns and everything. That's a level of sophistication for people to actually get into, I mean, we're talking retail here, right? For people to get into derivatives trading and survive the experience, I might add, because I do that shit, right? I mean, it's what I do over at RPQ. It's going to take a while. And it's not everyone's cup of tea because, I mean, the sophistication is really low, all right? It's just not there. Institutions will definitely pile into that. And we might see some adjustments to that, but then there's also ETFs and people are going to, and I think people are actually going to pile into these ETFs more before they pile into derivatives. Institutional traders, we shall see. Long term, I think this will have an effect because in stocks, right? And you've probably heard me talk about this on Evil as well and on RPQ. Long term, the market, crypto markets will be affected and will be moved by derivatives. It's just the nature of the beast, and especially once we see a certain amount of efficiency. But we're a long way away from that, and I hope that answers your question. Okay. This question always comes up. Are you going to sell a signal service? I knew this would be asked. I know you guys. Maybe. Yeah, we're not going to take anything away from, we've got a few more webinars to go, but maybe. So one guy said it was brilliant. Thank you very much. Thank you. Sorry about my voice. I'm not used to public speaking very much. I can make some, no problem, but when's they're working, so recording would be great. Yeah, I have it set to record in the cloud, and I hope it'll be recorded in the cloud when I'm done. So I'll post that shit, obviously, on Evil Speculator and on RPQ. Really good to put a real face to the Evil Speculator and the real mole. Yeah, I used to be much prettier a year or two ago before I got the thyroid thing happening, and now my eyes are fucked, and I'm going to need some surgery to fix it properly. So I used to be much more handsome. But, what you going to do, right? But it's good to meet in person, right? Good stuff, very educational. CME seems to have strong aspirations to become a retail casino with all these micros. Yeah, I bet they do. Same Zoom link for each session for this week? No, I don't have a constant one. I'm actually leeching off of Scott's because I'm a cheap bastard account. So I create them in there. Trading futures for months now, although 90K margin for one contract. Okay. Yeah, let me know. Shoot me an email. Let me know how it goes. I want to hear some details. So it's going. I've been all over. I've been all over futures, wheat, everything. The whole McCoy, and I love futures trading. But you can't do it all. But you can be all over the place, right? I would settle for text with what coin and buy sell. I'm a simple guy. Well, if I would be doing this, hypothetically speaking, it would be much better than that. You know me, come on. You know me better than that. Expect the best. Okay, anything else? Okay, that was in the comments only. I hope I didn't miss anyone. If I did, then I apologize. Should we do anything? Okay, that's something else. It's from before. Hi, Homo, stupid question. There's never such a thing as a stupid question, just uneducated ones. Listed instruments, stocks, indices like SPX are recorded too. So what is the difference there? Looks like you're going to tell us in future sessions, as you just mentioned, so a null question, really. I'm not sure actually what. Oh, you mean by recorded, meaning there's metadata about it. Is that what you're talking about? I'm not sure I understand the question. Maybe Manish, that was Manish. Can you elaborate, please? Maybe I'm just being stupid, which I am. But, just explain it like you would to a 12-volt, lower yourself onto my mental level, and I'm going to do my best to answer it. Answer recording of the webinars. Yes. Okay. I answered that. How many data points you use to system of trading cryptos? Can you short cryptos? Can you estimate how long the bull ride will be in cryptos? What, only 3 questions? Dude, Roberto, what are you doing to me? We use at least 2, 3, 4 main alpha factors, and there's others that we look at on alpha factors that we look on a very, very long-term basis, which are not officially in the system. Okay, so it's kind of not. I can't give you the definitive answer, but what I can tell you is that, I mean, like, how would you say that? Quantize it, whatever. Words fail me literally. What you will get over the next few webinars is the ones we mainly use, if that's good enough. Okay, and you will know how to use them. Is live the only way to see the webinars? No, we're doing the recordings. But, show up. I like to have an audience, not really. But, I don't want to sit here by myself, talking to myself. So make an effort, guys, right? Given the difficulty of getting out of actual coins, how do you feel about trading through instruments like Bitcoin Trust, GPTC, they trade like ETFs? Yeah, I mean, trade them if they're liquid. For me, it's always about liquidity, but not for the system. That's not what we're going to do. If you start going off script, then you're on your own, basically, right? Technology-wise, didn't I tell you you don't use words like that? In terms of technology, right? Just kidding, Roberto. I'm just messing with you. My humor is an acquired taste, like asparagus. So just don't take it personal. In terms of technology-wise, like Roberto would say, how much should we know to build the system? Well, I'm going to teach you in the next few. Nothing. I didn't know anything about technology. Just, you would be executing anyway, manually, no matter what, because, I haven't hooked into all these exchanges, depending where you are, right? That might come later, right? Something like this, that's sophisticated. Robert also asks, is Bitcoin expensive? If Bitcoin is too expensive, does buying a partial coin an alternative to buying full coin? Oh, okay. Yeah, well, that's kind of how it works. You just don't buy only a single coin. You can buy fractional coins, no problem. No. I lost power. Did you give my list of questions? Yes, I did, Roberto. I got you covered, mate. No problema. Tengo tus preguntas. Respuestas. So will the exchanges, I don't know, maybe you don't even speak Spanish. I'm making assumptions here. Will the exchanges hold up on major rush to a theater door? Amokta, good question. Amokta, by the way, if you guys don't know, he's been around a long time. He kind of comes and goes. He was gone for a few years. Did I ban you once? Maybe I did. Yeah, I was much more abrasive in my youth. And then, I became a much more better person, which you see now in front of you, before you. So anyway, Amokta has been with us for a long time. He's been trading equities forever. And he's been a good friend of the blog, always keeps the comment section busy. And thank you for that, Amokta. So will the exchanges hold up on major rush to a theater door? I think you probably asked that before I answered it in the comment in the slides, but obviously I don't think so. When there's the big rush, and that's why it's so crucial that you guys really abide by whatever the rules we provide and the signals we provide. So last question here. Well, no, there's more actually. For true newbie, recommendations for setting up to acquire Bitcoin. Highly specific to your location. If you're an American, you've got Kraken, Binance, and stuff like that. Don't go with Coinbase, please. Suck. And if you're European or anywhere in Asia, you have a wider. So do your research. I mean, there's a lot of exchanges out there. Binance usually considered one of the better ones. and Kraken is great. There's Sex, not Sex like an SEX, but Sex, CEX. So it's also a pretty decent one. Excellent presentation. Love your style. Somebody loves my style at least. Okay, I've got one. And regular blog posts. Appreciate all you share and do. Thank you, sir. I aim to please. That's Trader Geek. Might be a ma'am. I don't know. I'm making assumptions. And thank you for the detailed exposition on the crypto market. All right. I think that wraps it up, unless there's another question. Male, he says. It was a dude. Like I said, thanks, Mo. Good Sunday afternoon. I hope you were entertained, and I hope to see you next time. All right. Thanks, guys. Thanks for coming.